Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Most of you know me from Access Triangle Investor. Today, we are covering FLYN Nickel Mining Corp, a Canadian mining company advancing the Minago Nickel PGM project in Manitoba. I am joined by John Lee, CEO of the company. John, welcome to my show. It is great to have you.
Yeah, it's good to be back, Lucian. I see you change your background. It's got three little fancy blocks.
It's a different location, different background, but the format is pretty much the same. That is the most important. John, I want to start with the basics for the ones who are new to the sector and don't know much about nickel. What is the main usage of nickel?
Well, nickel in the last 5 years has quickly become the de facto standards in the high-performance electric vehicle batteries. The primary use of nickel is still in the stainless steel industry and the ordinary piping you have for constructions and the fancy utensils you use at home. It has a very polished looking feel and anti-corrosive properties. However, there has been but nickel had a bit of a transformation in the last few years thanks to Elon Musk.
Yeah.
And about 4 years ago, Elon Musk said, "Mine all the nickel you can, and we're gonna if you so long as you mine it environmentally responsibly, then we're gonna give you giant back contracts." And part of that talk really precipitated to a massive run-up. That's unprecedented. It's one of the very few I've ever seen in my 25 years of in the commodity business, where nickel went from $7 a pound to over $50 a pound 2 years ago, and actually coincided with the initial public offering of FLYN Nickel, the company which I founded, and I'm the chairman and CEO of.
Yeah. Can you explain a little bit what is nickel sulphate and what is it used for?
So nickel is a base metal, and nickel sulphate in particular is a precursor to the manufacture of EV batteries. So the nickel prices you see printed on, say, Kitco Metals and the ones that are traded on the London Metals Exchange is a refined nickel product that's 99.9% nickel. Mm-hmm. However, that is not the nickel that is in the batteries. So the nickel in the battery is in the form of nickel sulphate, which is a byproduct coming from nickel. Mm-hmm. And then in addition, you also have nickel laterite, and that is being used in the nickel pig iron from China. So that is a mixed form of nickel and iron that are mixed in. And then I'm not sure if you're driving out, there's another term as nickel sulphide. Mm-hmm. Nickel sulphide is a form of nickel ore or nickel rocks in the ground as opposed to nickel oxide. Mm-hmm. And much akin to, if you talk about silver, then there's a silver oxide and there's a silver sulfide. And also for copper, there's a copper oxide and then copper sulfide.
Yeah, definitely. John, how is the demand supply picture looking for nickel going forward?
Yes, the nickel is a very tricky market. I've been in nickel mining and nickel exploration for 15 years. The demand side has been fairly steady. There's really not a lot of titanic shift per se. Mm-hmm. 10 years ago, around 80-90% is in the form of stainless steel used for piping, for constructions, and also for some of the high technology these nickel alloy to mix with aluminum and to strengthen, and then to also make it less rusty, rust prevention. And since the advent of electric vehicle in the last 10 years, the market demand for nickel from the EV sector has grown from less than 1% to about 10% range as of today. According to different sources, that demand can go even further. So the overall demand and supply picture is fairly balanced, but because of that because the market's been fairly balanced in the last 10 years, and there hasn't been any spike in nickel supply, and there hasn't been any spike in nickel demand. So all of a sudden, that incremental demand from the EV space triggered a major run, because nickel has been trading just quickly between $5 a pound to $10 a pound from 2011 to 2021. And then all of a sudden, that additional incremental demand from the car EV battery space then triggered that breakout. So that's why it was not not unexpected to see, once you do a breakout of that, such a long consolidation, you see a nice breakout, but never than imagine, you went up 6 times. I think it's a combination of both fundamental driven and as well as speculative driven. And that's why we see now nickel has come all the way back down to what used to be a very heavy resistance, which is now very strong support.
Sure. John, how did you end up in nickel business? Or can you give me a short history of how was FLYN Nickel founded?
Yeah, I mean, Lucian, as I mentioned earlier, real quick, the demand side has been sort of a nonchalant. There's not a lot to talk about, but as EV grow by the 2030, if the EV penetration to double from the current 10 to 15% to 30%, which is still less than Biden's target of 50%, then you're looking at that market share of nickel from EV to double from the 10% to 20% range. And that's going to have a positive impact in the nickel market. We can talk about the supply side, which is also I think that's going to be more the driving factor to the market going forward. But nonetheless, my history of nickel, I started out in the mining business in the early 2000s, having been semi-retired from the dot-com era. And I stumbled onto Vancouver from the Silicon Valley just as a vacation, and you cannot be semi-retired, and you cannot be in mining. You cannot be in Vancouver and not be in the mining business, as you know at the time.
Yeah.
And I was a very successful retail investor until about 2009, when the financial crisis came. And then after that, 2011, the market recovered, and recovered quite a lot of my own money, and thought it was kind of interesting to dabble into the mining industry as taking one of the companies that I invested in, which is on the verge of going belly up. So that's how I started Silver Elephant. It used to be a book called Prophecy. And in the span of 14 years, I've raised well over $150 million. My initial focus back in 2010, 2011 was nickel. The reason is I'm not an exploration geologist, right? I cannot really sort of a needle in a haystack to make a silver or gold discovery. And these assets are always very hard to find. And unless you really want to venture into some of the more risky jurisdictions. And I wasn't so much into copper because there was so many of the assets available, and a lot of them required billions of dollars to go into productions in South America. So I fancied into nickel because nickel had a run up around 2008, 2009, when nickel went from $6 to $20 a pound. I don't remember exactly the reasoning at that time, but I thought it was kind of interesting. It has that torque, right? It has that sort of has that sort of a it has a good leverage. So I got into the nickel business. I was one of the most active junior CEO at the time. I stringed together 5 different nickel projects in North America, and I spun out a project called FLYN Prophecy Platinum. And we debuted it at $250 million market cap with a big investor from Eric Sprott. We made a huge platinum discovery. The project is still there. Unfortunately, I transitioned that into a different management group that haven't done a whole lot. Nonetheless, Lucian, nickel had a big transformation in the last few years with this new EV breathing into life. And kind of nice segue, I'm going to briefly talk about what happened on the supply side.
Yeah,
I was 14 years early in the cycle. So I got into nickel exactly sort of at the tail end of a bull market, and the nickel had a 10-year doldrum from $11, $12 a pound when I got to the low of $5 a pound only 3 years ago. And the reason for that, not because of the lack of demand, but because of the excess supply coming from the nickel oxide, which is the laterite market from Indonesia.
Mm-hmm.
And that matched or catered to the Chinese customer, of whom really not have a lot of regard for environment, because these nickel laterites were very, very difficult to extract the nickel from the ore. And the only way to do that, quick as I mentioned is you have to apply Pulp Fiction grade acid to dissolve that nickel. You can literally, if you put your hand in there, you're not going to see it when you pull out. and you have to apply 2,000 degrees Celsius, 50 times bar atmospheric pressure to get that nickel out of that nickel oxide, separate nickel from the nickel oxide.
Yeah.
And that sounds all good and dandy, but the remainder, right? The waste materials, how are you gonna handle these highly toxic, just non-recyclable materials? In Indonesia, they just dump it into the ocean.
Yeah.
And all of a sudden, nickel from laterite production went from non-existent back in early 2000s, 20 years ago. It was non-existent to now majority of the nickel is coming from the form of nickel laterite. And these are coming from Indonesia, Madagascar, New Caledonia. These are all very high-grade surface nickel laterite. This is not a difficult mining exercise, but these are notoriously difficult, accident prone, may seem low cost at the start, but they turned out to be, all of them are several $billion plus. And you're seeing that shift gradually away from the Japanese and from the Vales. They're selling and disposing this nickel asset because they see the writing on the wall that with the carbon emission sensitivity era that we're embarking upon, it just be counterintuitive. It would not be nonsensical to be putting that kind of nickel in the car business. So I think that over time, this nickel laterite is going to be gradually, or one way or the other, be this sort of supply. It has to be separated from the clean nickel class. So I'm very bullish in nickel going forward. And as I said, I was 14 years early on the nickel space. And going back to Minago for just a minute, the project always been dear in my heart. That when I started the nickel mining business in 2010-11, that was the #1 project that I liked the most. And I fell off my chair, honestly, when that project became available in 2021. Not just when I raised $11 million, a lot of that from Eric Sprott. He was not too happy about it because I took that money and purchased the Minago project within Silver Elephant, and then subsequently Elephant spun out the Minago project into the company called FLYN Nickel, and that project went public. The company went public exactly 2 years.
I want to hear your overview of the project. Give us a short overview, and then we will go from there.
Certainly. Minago is a very, very special project, and that's why it's dear to my heart. The reason is it is one of the highest grade greenfield and developed nickel sulphide project in North America. It has we just upgraded the resource estimate. It is open pit configuration with over 500 million pounds of measured indicated nickel, grading at around 0.7%.
Yeah, so the news.
I want to emphasize the significance of that grade because of the lack of investment in the nickel sulphide business. Nickel sulphide has 10% of the carbon footprint versus nickel laterite. You don't need to burn it. It's hydrometallurgical. You produce nickel sulphide concentrate. So when I started the business in 2010, the average grade of a nickel open pit sulphide deposit in North America is about 1%. 14 years later, winding up 14 years later, the average active open pit nickel sulphide mines in North America is 0.4%. And that grade is going to drop to 0.2% in 10 years' time. The reason is, at these current nickel prices, it's not economic. So there's no incentive to invest and to discover, to explore for nickel sulphide project. So the only remaining nickel mines in North America, primarily in Canada, are all underground nickel sulphide because they're already exhausted all the near surface nickel sulphide mines, and now they're going underground. And Minago, 15 years ago, was dear to my heart. I see the picture, I see the sort of writing on the wall, and now it just makes Minago all the more precious because now the grades of Minago is double of what is now the active open pit nickel projects. Their mines are being mined right now.
Yeah, your numbers are around 0.7, right?
Yes.
Great.
Yes, and not to mention because the inflation and in terms of accessibility, Minago is literally 1 kilometer from the highway. If you took an aerial map, and I rode a helicopter just a year ago with the First Nations chief, it's almost 18 months ago. It would look like it's like a highway, 2-lane paved highway, and you have a fork, by the road, it's almost like a garbage dump. It's a kilometer, it's 1 mile away in Little Fork, and Minago sits right there. Immediate access to road, power, and water. There are no archaeological sites and no sort of any topography concerns with regard to topography. So it's an ideal setup for an open pit mine. There are really very minimal technical risk, very minimal infrastructure risk, and this is exactly what the investor is looking for, which is a project directly correlated and leveraged to the metal prices.
Yeah, I want to touch on the news that showed increase in the pit resource at Minago, almost 50%, 41, 42, I forgot it. And you added the platinum group metals, PGMs, estimate for the first time. That's my question. How much of the PGM addition are we talking here?
It's a little bit shocking. Sometimes the market leads and sometimes the market lags the development of the resource. So we're a little bit surprised that we're not met with sort of a non-response to by the market with this news that we came out a couple of weeks ago. I mean, the stock went up about 30%, but we're still 90% on the top. Yeah. The news is very significant in our view, because the thing that we care most about is a measured and indicated in-pit resource, because that resource is readily can be upgraded into proven and probable open pitable reserves with the right nickel price. The project has over, not in today, the actual cumulative investment in the project is over $60 million. But if I were to extrapolate in today's money, it'd be well over $100 million. It's got almost 90,000 meters of drilling, and that itself would have cost close to $50 million today. So in addition to, so we did a round of drilling in 2022, Lucian. We really very carefully programmed our exploration drilling, looking at where the infill, where we can get the biggest bang for the buck. So with that, following to that successful drill program in 2022, we were able to upgrade a lot of that resource, some of the inferred resource and some of the infill resource, some of the resource that were not in the previous resource estimate into measured indicated in-pit resource. Majority of that has come from our modeling from near surface, so that we were able to delineate some resources that are very near surface and that previously thought was just overburden. So that itself will reduce the strip ratio, increase our measured indicated resource. As I mentioned to you, used to be, and the project is fully permitted today. And what that means is based on the approved parameters, permitting parameters at 10,000 tons per day, if say 80% of that M&I could be upgraded to PMP reserves, we could be looking at, used to have a feasibility study 12 years ago or 15 years ago with a 7-year mine life. And now that mine life is being extended to close to 10 years. So this is a very significant news on this measure indicated upgrade.
Yeah, you said at the right nickel price. What is that price for you? Right.
That's the previous feasibility study was back in 2009, and the break even was at around $7-8 a pound. And they had factoring some other byproducts like frac sands and limestones, etc. So with the byproduct credits, they're looking at a break even. Without the byproducts, looking at the break even about $10 a pound, and with the byproduct, it's about $7 a pound. I don't think the picture has changed a whole lot. I mean, there's inflation, but then we're not doing study. We're being very cautious, conservative in byproduct credits. There's not the precious metals or base metals. So I would say probably, I don't really want to venture to say, I would just say back in the days, $10 nickel, even back in the days, $10 nickel, people struggle to make money out of. Okay. And so today, at $10 nickel price, Australia's BHP shutting down half its mines in Western Australia and reaching out to the government for subsidies, and also Canada is looking to subsidize infrastructures for mining projects for nickel in particular, which is critical metals. So I can probably comfortably say that under anything $10 nickel, very few mines are making money today. And then if you want to actually spend $1 billion to build the mine, then you're going to have to add additional $2 to $3 a pound to make that in order to justify the the construction of a new mine. However, the X factor though, Lucien, is the discovery of the PGM. So that could have a material impact. We don't know to the extent, but we're looking at already 500,000 ounces of platinum and palladium in the fold. So we're looking forward to as a next step for the company going forward is to incorporate these byproducts, platinum and palladium, which we feel a lot more comfortable in putting into the models than say frac sands or limestones. And then so will obviously reduce the construction, will reduce the break-even price at the time. And just give me 30 seconds. We're very, very encouraged with this platinum and palladium discovery. Minago has always been known as a nickel project in the last 40 years since its discovery. And then we're just very surprised that every single drill hole that we did in 2022, every time there's nickel-bearing nickel mineralizations in our results, we saw platinum and palladium. And these are like 50, 70 meters of 0.5 grams. So, and what we found out is only 20% of the historical drill hole has been assayed from PGM. We took on a arduous exercise and it's painstaking. We went to the core shack, which is extended modeling, and we're pulling over 40, 50 drill holes in particular sections of the previous drill holes. And it was a very long, laborious exercise. So we're able to get another 10,000, close to 10,000 meters of PGM assayed and released to the market. So we're very, very confident, have very high confidence levels so instead of spending $20, $30 million drilling again, right? Yeah. So we're able to come up with this very prospective first inaugural PGM resource, which very, very excited about. We also had done some preliminary metallurgical testing work, and I think Minago has a bit of a different flavor to the other projects in the Thompson nickel belt, and so even with the not sort of the high underground nickel grades, we were still able to obtain a very decent recovery in the initial bench testing of our VGM. So definitely we have no doubt that this is going to be accretive to the project, and it's going to be demonstrate quite favorable economics as a byproduct going forward.
Okay, so now you've done all that work. You have mineral resource estimate update. What are the next steps in the let's say 12 months horizon? Where are you with the PEA?
The project, if you look at the life cycle of a mine from a discovery to say getting the first nickel out of the ground, we are 90% there. You know, we've done a lot of exploration. There's a prior feasibility study. There was a dedicated millions of dollars of metallurgical study on nickel, where we know the nickel recovery well. And the project is actually fully permitted. And there was a minor notice of alteration to be completed. And so we expect to have the decision on that, the approval on that sometime this year. So the project could be what I call the shovel ready by the end of the year. What I mean by shovel ready is that we have all the requisite permits to actually start the construction activities. We also have a very, very strong support from the First Nations, Norway House. They're very entrepreneurial. They're one of the top 10 population in Canada, and the project sits in their governed territories. And so we have very strong support. They actually invested money in the company. They own 19.9% of the project. They bought the shares at a bit higher price than we are sitting right now, that's why it's offers such a compelling value proposition. And the next step is we had commenced the feasibility study when we go IPO 2 years ago, and that is in the works because the not so much. It's really because of the study is still in the works. 90% of the study is completed. The concern or the challenge is to do with the nickel price, because we don't want to publish a study at an $8 nickel price like we're doing right now, but we cannot also publish a study at $15 or $20 nickel price, because that's not where the nickel price is today. So we have to tread the waters carefully, and we don't want to be making this exercise of feasibility study repetitive, because it is a very expensive exercise, and the project is already, we've known pretty much all we need to know about this project at this point in time. We have 1 terabyte of data, right? So we don't need to do any more window dressing. So at this time, it's really a function of what the nickel price is going forward and the appetite of the nickel market. We've had over 15 strategic investors that are knocking on our door, from batteries, from auto, from traders, and all the prominent major nickel traders in the world, all the several major nickel mining companies. So I think we're well known in the space, and also given Minago's sort of a illustrious history or lack thereof during times of struggle, and it's really about sitting tight and manage our resources, continue foster our community relationship, and then continue to keep our strategic investors updated, and then waiting for all the stars to align, and then hoping that we're not gonna, well, not hoping. I have all the project, barring a couple of small exploration projects, I've kept all of them. So we have the financial sustainability and perseverance to not be a bystander or transient passenger to this wonderful project, which I am very, very confident within this decade. We're one of the very few nickel projects that can go into production within this before 2030. So we're committed to see the end of the tunnel, Lucian.
Yeah, that brings me to my next question. And you said that people knocking on your door. Have you considered to take a partner on the project? Is that an option for you?
I'm not an exploration geologist, so I'm not married to this is the greatest thing since sliced bread. So my background is M&A, and that's how I come to acquire this project. The way I look at it is to put the mine into production, there's always going to be dilution. So the question is, how can we structure a project that would protect our existing shareholders' interest? And we're not looking to sell the project outright, even though there's been a few non-binding discussions.
Mm-hmm.
Our market cap right now is a shadow of its former self at less than 10 million Canadian. That's less than 1/7 of the money's got into the project. Is 1/3 of how much money that FLYN Nickel has invested in the project. So we're going to keep our options open, and right now we're not looking to really slicing or dicing the project. We just want to continue to de-risk the project. Eventually, we have to find a way to garner hundreds of millions of dollars for the mine to production. So that could be potentially selling minority stake, potentially selling prepaid, sort of, it's called you can call it hedging or prepayment from nickel consumers, and then to finance the project, or potentially sell the project if as an option, if all the other options are exhausted and there are no better way we can provide returns for our investors. And so I think right now
some form of offtake.
Yeah, prepaid offtake, exactly.
Okay.
So I mean, the previous feasibility study, or just based on the permitted parameters, you're looking at an output of 20 to 30 million pounds of nickel per year. So at an annual output on an annual at $10-15 nickel, you're looking at an annual revenue nickel output of around $200 to $300 million a year, right? So if we can get a partner who can prepay that a year or 18 months worth of output, then that would be a big part of that capex finance. And then you can tap into some of the policy banks, exim banks, and the government is also being very open in discussion and looking to finance the infrastructure part of the projects. And then additionally, because the project is in Canada, a lot of the equipment manufacturers and mining equipment manufacturers like Caterpillar and SAG ball mills, they also offered sort of vendor financing. So I think not necessarily have to all come from equity. There's quite a few innovative offtake financing, bank financing, policy bank financing, and equipment financing can get up to, sometimes in the right jurisdiction, the right zip code, and the right timing, can get up to 70-80% of the total capex requirement.
Yeah, you are also in the process of acquisition of all the issued and outstanding common shares of Nevada Vanadium. What will this acquisition bring to your company? And if you can share some details of that specific transaction.
The Nevada Vanadium proposed merger with FLYN Nickel. Interestingly enough, Vanadium was also spun out from Silver Elephant along with FLYN Nickel 2 years ago, and the rationale is to create a North America focused advanced stage battery critical minerals mining company. The Vanadium project is fully permitted in Nevada, which is the #1 jurisdiction in all of the world. And the project received a positive record of decision already from Bureau of Land Development Management. So, it's not usual. You don't see a junior company or you don't see a management out of Vancouver that able to permit 2 major critical minerals project in Canada and in the United States. And we're able to make that achievement on a very shoestring budget. And then, so first of all, is to enhance our profile and create that economy of scale, and then also provide a bit of more trading liquidity for FLYN Nickel. And also, secondly, is to diversify our risk. Even though we have a very, very low risk profile, there's still, I think the #1 is really the commodity pricing risk than anything else, as I mentioned to you. We don't know when the nickel is going to recover, and same we don't know the vanadium is going to recover. Each metal has their own dynamics. But we feel very good that if either projects have a good of a sell wind at their back and able to get one project into production, that's going to be able to finance the other project. So in a way, investors afforded 2 lottery tickets for the price of 1, and then just having one project that can go into production can really establish that foothold into minimizing dilution to finance the other project into production. And that is really primary reason, which is diversified commodity risk.
Okay, it has been a while since the transaction was announced. When do you expect the closing of that transaction, and why was there why was the delay actually?
People are still the reason is not to do with the company, but it's mining companies overall are still somewhat feeling the aftermath, after effect, hangover from the pandemic. And everything is very, very slow. I think a lot of this is to do with the capacity constraints of our auditors. We have one auditor, and the auditor is all of a sudden handling, instead of one company, Silver Elephant is handling four outlets of coming from Silver Elephant. So we had a struggle with our auditor. We had to change our auditor because a auditor partner cannot take on has a certain limit as to the number of companies they can audit. So coupled with this spin out, so it take about 18 months just to bring each company's auditing status to compliant. From there, then we can then embarking on the merger. Same with the technical reports, reporting requirement with the listing exchange, because of all the different when the company was spun out, a new technical report need to be completed to be under the new company's name. So that also took us a long time, and some of the staff had a long COVID, and with just a bit of a lot of housekeeping work we had to do. However, I'm glad to report that the merger is now on track to go to vote sometime in the next 90 days, and we anticipate the merger to finally come to fruition sometime in the middle of July. Everything goes according to plan. Okay.
John, who is on your board at the moment? I saw some people leaving, some people coming. Who is on the board, and from the technical side as well? Do you have any people? Are they all M&A oriented like you?
We actually have a very well-rounded team. My initial focus is M&A. I have traveled and walked 45 countries and visited a couple of dozen projects. I bought and sold dozen projects, commissioned over couple of dozen technical studies. So in addition to M&A, we have a very good permitting team with Ron Espel and Doug Ramsey, a couple of other very good permitting gurus, and that's why we're able to get the project permitted. And we have also a good operational team. So we recruited Rob Van Junen as the Chief Operating Officer. He's a lifelong Thompson resident where the project, Minago project is, and he used to work for Vale, which used to be Inco, for over 30 years. So he took early retirement, and he was fascinated and see the potential of Minago and joined us 3 years ago. So, and we also have a good exploration team. We leverage the relationship from Rob and Junin, and we have a very sort of prospective team. Like, for example, for the Vanadium project, we have Bill Pincus, who is a lifelong Nevada guru and 30, 40 years in exploration. And then for Thompson, we have Rob Smith, which is a 30-year exploration guru from Inco. And then from South America, we have a number of well, that's Bolivia, that's silver, that's a so different story. But we're able to leverage sort of within our enterprise the different skill sets to fit into the fold. And on the board, we have a Greg Hall, who's the co-founder. He is in the brokerage business and is well known in the market. And then we have Masa Igara, who's very well connected in the Japanese trading houses. He used to work for Solomon Brothers, is well connected to all the major Japanese trading houses. We also have a representative from Norway House, which is the First Nations, and which really continue to be an important nexus to continue to foster our relationship.
Yeah, you mentioned First Nations, they have 19.9% ownership in the company. Do you have some other big names on your share registry?
Yeah, usually, and real quick on the First Nations, if I could just give a plug, we've been managing over close to 10 different projects over my 20 years of career. And Minago is a case where usually people put on resistance, they want to be educated, and they want to take their time. This First Nations community is out, they want jobs, and they cannot wait until tomorrow, since yesterday, to put the mine into production as soon as possible.
Yeah.
So we have very, very strong support. So that is our, we just, we're very pleased and we're very grateful of their support and unwavering support. So we're very appreciative of that. In addition, when the company go IPO, it was at 70 cents, and right now the company's at 10 cents. It was IPO'd at $1.40, and I bought personally $500,000 at 60 cents. So everybody's underwater, including First Nation. They bought at 10, 11 cents, and right now stock is trading at 8 cents. We have Blackstone Minerals, and they're one of our strategic investors. They have participated in all the down runs that in the last couple of financings, and they're a Australia Stock Exchange listed company with a big nickel sulphide project in Vietnam, and so they own about 6% of the company. And we also have a German institution, Sparta, and that they participated in all the financings that we have done, and also have come into the market and bought quite a lot of shares at these price levels. And in addition to Oracle Commodity Holding, which is a spin-out from Silver Elephant, and they are also a majority, they own about 20% of the stock. So altogether, about 50% of the shares are held by institutions and insiders.
Okay, that's my next question. The insiders, do you know the approximate number of management? How much does management have in the company, skin in the game?
As I said, institutions, Norway House, Oracle, and Sparta, and Blackstone Minerals, and a couple of other high net worth retail long-time supporters of our enterprise, together just under 50%. Mm-hmm. And unfortunately, the management doesn't know a whole lot about 1 to 2%, because when I started the company, I owned 30% of the company, and since being really diluted to where we are. Mm-hmm. However, I'm looking to participate in future financings to try to get my pro-rata equity back. I bought several hundred thousand, well, I think probably over 1 million shares in the market. I had to sell at earlier this year, and in order to continue to finance the company and sort of reinvest the proceeds into private placement. So my percentage is about 1 to 2%.
Okay, John. Tell me just one other thing. Can you tell me more about your cash position, and is that number that you will tell me sufficient for 2024, or you will have to raise this year?
Yes, we have raised about $1 million in the last 12 months. We're watching our treasury carefully. Right now, our cash position is just under $500,000. And we don't have any significant exploration or big ticket expenditures on the horizon. Mm-hmm. And we've completed our technical studies. We might have to tap into the market for bridge equity financing to get to the end through the end of the year. But we do have very strong existing support from investors, and if a financing was to be undertaken, would not be overly excessively dilutive.
Okay, so you have $500,000. What is the cash burn, monthly cash burn for the company?
Depending on if there are any significant programs. If not, our cash burn is at around $150,000 range.
Okay. Final question, John. A news flow from the company. What and when can the investors expect some news going forward?
Well, we have that very significant event that came with the release of the resource estimate. So, and we have been really had. So I think the key sort of thing moving forward is to reconnect with our investor base and get our story out, since we come on your show. We haven't really had any a marketing outreach for the last 9 months. So I do believe that there is a story to be told, and that there is a fairly big disconnect to where our valuation currently to development of the company. And we do anticipate a rendering of the record of the notice of alteration to come sometime before September, maybe as early as July, and is sitting on the desk to be signed off. So if that news were to come, that would be the last major hurdle to upgrade the project to construction decision. And then this is a matter of waiting for bounce in the nickel price and the bounce of the PGM price to hopefully sort of rekindle our interest on the share price. I mean, nickel has gone up about 20% just in the last few weeks. Lucian, I think there's a bit of a sector rotation, as we talked about earlier, from gains taken from the precious metals sort of a market into some of the overlooked base metal market. So we hope that trend to continue.
Yeah. That was John Lee, CEO of FLYN Nickel Mining Corporation. John, thank you for coming to my show, and I wish you luck.
Yeah, thanks. Our ticker is FLYN on the Texas Ventures, FLYNF on the OTCQB, and you also look me up at Twitter. Just search John Lee FLYN Nickel.